Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar weakened against major currencies for a second straight session. While November non-farm payrolls surprised to the upside with 64,000 new jobs, the unemployment rate rose to 4.6%, signaling softer underlying labour demand. Job gains were largely concentrated in non-cyclical sectors such as healthcare, suggesting limited economic momentum. This outlook continues to weigh on the dollar. WTI crude extended its nearly two-week sell-off, sliding to a low near 54.97, its weakest level in almost 11 months. This move reflects a broad repricing across the oil complex rather than short-term sentiment. The key driver is growing optimism around a Russia-Ukraine peace outlook, raising expectations of looser sanctions and reduced geopolitical risk premiums. The decline appears driven by rapid unwinding of risk and expectation premiums, rather than a sudden deterioration in physical supply-demand fundamentals. Spot gold traded near $4,340 per ounce, supported by a weaker US dollar and slightly lower treasury yields. Despite mixed US labor data, the rise in unemployment reinforced expectations for future Fed rate cuts, helping stabilize gold prices. Dollar weakness remains a key bullish driver given gold's role as an alternative reserve asset. However, rising long-term yields, particularly at the 30-year end, continue to cap upside momentum as higher real yields reduce the appeal of non-interest-bearing assets like gold. The yen rose to near 155.7 during the US session. The dollar outperformed following recent US employment data, while the yen initially strengthened on expectations of a Bank of Japan rate hike. Japan's November exports grew 6.1%, beating forecasts, and core machinery orders rose sharply, signaling stronger capital investment. Markets now expect the BOJ to raise rates by 25 basis points to 0.75% this Friday. However, concerns over Japan's worsening fiscal outlook continue to limit further yen appreciation. Euro held firm around the 1.173 level and briefly touched a near three-month high at 1.1804. The broader bias remains constructive as the dollar struggles amid dovish Fed expectations and speculation over a more accommodative future Fed leadership. Meanwhile, markets increasingly believe the European Central Bank has ended its easing cycle, supporting the euro. That said, traders remain cautious ahead of Thursday's ECB meeting and upcoming US inflation data, both of which are expected to provide the next directional catalyst for the pair.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.